Alright, about to go long on NASDAQ here. Targeting relative equal highs on the 5-minute. There's actually two sets of relative equal highs that I'm targeting, and I eventually go with the closest set of relative equal highs. So on the I'm using a 5-minute and a 15-second chart for entry. On the 5-minute, we have an inversion fair value gap, followed by a fair value gap that closes above it. So I'm treating that as like a balanced price range. And on the 15-second, we have inversion. We have a set of BISIs that are in the upper half of that 5-minute fair value gap. So we trade below it and then we trade above it, and I see that as bullish order flow, and I enter long. This is during the 650, 710 macro. I normally stick to micros for these lucid accounts, but I wanted to get a little bit more aggressive. My live account and where I am financially, I'm in a good place. So I just want to be a little bit more aggressive on these evals. I'm not going to go more than one contract on NQ. And I'm not going to just solely trade NQ. I'll trade micros as well. But I decided today that I want to be a little bit more aggressive. Especially if I'm focusing on dealing ranges within that 50-10 macro windows. That could be 10 to 40 handles. It doesn't have to be 100 handles. And I've had plenty of weeks where I've been hitting 40 handles consistently. So I like how I've been trading. I like how I've been respecting the risk. And I don't know, I just want to be a little bit more aggressive. Again, these are evals, they're just demo accounts, so I treat them with respect. But if I've had these for well over almost 2 months now. I've been trying to slowly build them up, and I just not that I'm getting impatient, but I just want to trade minis, one single mini, and look for a low-hanging fruit. As long as I'm following my rules, looking for low-hanging fruit, looking within that dealing range, trading within that dealing range, trading in sequence with time and those 50-10 macros, then I see no problem trading at least one mini, and if I take a loss, then I'll reduce my risk and trade with micros for however long I need to recoup majority of that loss. But these last couple of weeks, this last month has been good. There's been some good trading. I've had both months I've finished positive in my lucid accounts as well as my live account, even though my live account I'm only trading one single micro. And I don't know, I feel good, and I'm completely okay with the risk and taking a loss if that may be. So we also have on the 5-minute a CIBI that I'm paying attention to. We're trading above it. I don't have it labeled out just because it would kind of mix up with that 5-minute fair value gap that I have shaded in green. So I'm just keeping an eye on it. I just want price to stay above it to treat it as support. And I really like those 5-minute highs. They're really smooth. It looks like price wants to disrupt that. Prior to entering, all the time frames were bearish, and I flipped my bias when I was channeling through the time frames, and I saw that 5-minute had relatively equal highs that were very clean. So I figured, hey, listen, the bias overall may be bearish, but price, I believe, will want to disrupt that before going lower. So there's buy side above that. There's buy stops above those highs. There's buy side liquidity, and before we move down, because honestly, today during the day it was pretty bullish for the most part, and I could totally see price wanting to disrupt those that have been long from the AM and PM session. But I liked for this dealing range that the idea of price taking out those highs before possibly making a move, continuing bearish. So that was my thought process on my entry. So I like how price is trading above that SIBI. I'm treating that as a inversion fair value gap. I'm just checking some of the other time frames, the 30-second, the 1 minute. I believe eventually I changed to the 1 minute just because it looks a little bit more cleaner. The 15-second has a bunch of volume imbalances. It doesn't look clean. I like the way the 1 minute looks. So I just stay here for the remainder of the trade. And I have my terminus, my sell limit, one tick above that first set of relative equal highs. Now we eventually push and take out the relative equal highs above that. But, again, I'm following my rules of low-hanging fruit. And it's totally possible that, we take out that first set of relative equal highs and then shoot down. So I'm just being responsible here, especially being that I'm trading with minis for the first time in a while. So not only, I don't have it annotated, but not only do we have that 5-minute fair value gap, but we also have a 5-minute order block. And it's kind of layered right on top of that 5-minute fair value gap. But the fair value gap is more important to me, so I don't annotate the order block. And I like this push here. Price looks healthy. At this point, I should have been break even, so that's a mistake. But yeah, and we hit our terminus, and that's all she wrote.